I bet. Oh, you vegan? Okay, that's what's up. So you probably learned something new too. So like I said, olive oil, yeah, you can put it on your salad. All the other stuff is just once it gets heated. Look, we're about to Google this right now. All right, I don't even want y'all to wait to see it. Right, we're about to Google this right now. Look at this. What is so is olive oil bad once heated? Okay, let's see. So that's probably not. Here we go. Is olive oil a carcinogenic? Well, it's carcinogenic when heated. Olive oil produces carcinogens when heated. Fact. What's true is that when any cooking oil is heated to the point where it smokes, it breaks down, blah, 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 blah. Anyways, long story short, right? Olive oil produces carcinogens when heated. Let's look up the definition of a carcinogen. Okay, carcinogen. Okay, carcinogen. We'll just look at a Wikipedia version real quick. What does it mean, right? Carcinogen, right? The formation, that's all you need to know. The formation of cancer, okay? It literally means cancer causing. That's basically what it means. So yeah, I just learned something. Oh, hold on. This might be, I ain't gonna lie, my bad. I'm kind of all over the place. I'll be getting excited talking about health food and shit like that. No, that's not what I thought it was. But this is kind of just like a chart so you guys can kind of see what it classifies as. But yeah, it's those are really the only two oils you should be cooking with: avocado oil and grapeseed oil. Anything else is it's no bueno. But that's enough of that, because y'all gonna have me going a whole. I'm gonna be all the way in left field talking about shit that don't got nothing to do with nothing. All right, my bad. So I like to be able to start off with these calls, so taking advantage of two of the products. I already scanned a harmonic scanner while I was letting the music play, so they don't have anything on here worth looking at, so I'm gonna go ahead and get rid of that. DeLorean, as y'all know, doesn't usually crank out too many setups this early on. London session doesn't start for like another 45 minutes, so we just go ahead and take it straight to the charts. All right. So I guess we'll pick up where we left off from last week. So we are still in pretty good profit on AUD USD. I'll show you guys that setup real quick. So we finished off the week last week pretty good. I usually drop the end of the week results. So we went 3 and 3, but we did get close to 500 pips. And you could have gotten up to about 18.5% account growth maximum. It doesn't mean that's what you got. That's what you could have maxed out at. And let me go find AUD USD real quick. It'll be right here. So AUD USD was a market execution. Click on the picture right here. All right, so as you guys can see, the market ended up reacting at that level, and we did hit TP1, and now we're kind of, waiting to see if the market is going to keep extending. But what I want to talk about today with this is possible re-entry. So I actually need to make a YouTube video for this as well too. So re-entries, should we still keep? Great question. So yeah, as soon as you asked it, yep. So yes, Michelle, if you're still currently holding AUD USD, keep holding that. One thing I want to be able to get people comfortable with is swing trading. So for me, my biggest difference in trading was getting off the lower time frame. Now, I'm not saying that to say it's a bad thing. I'm not saying that to say if you're doing it, if you're being effective with it, keep doing it. It's all about what works for you. What did not work for me is using the lower time frame, okay? So if you guys ever notice, any of my setups are all pretty damn big time frames. And a lot of times I'm going to use a time frame that y'all are usually not familiar with. Like, look at this, right? The 9 hour. I guarantee you probably not really, I ain't gonna say never. You've probably not seen too many people mark up a chart on the 9 hour time frame, okay? So I'm a little bit different with how I go about taking my trades, but it works for me, right? So one thing I want to be able to talk about is let's go over AUD USD, just because I do have a lot of other markups that y'all can see, but they still need to play out. Yeah, all these are, hopefully Cad Jpy and GBP JPY happen tonight. We'll see. We'll go over those a little bit later. So let's go ahead and go over AUD USD. Break this down from top to bottom as to why I took this setup. Let me pull up a different chart on Owanda. All right, bet. Cool. All right, cool. So anybody that normally gets on my calls, and I usually do all these setups the exact same way. I like to be able to start off on a 1 hour time frame. The 1 hour time frame by far is my favorite time. For me to be. Wait. What the hell? Can y'all still hear me? Like my speaker started tripping out a little bit. Okay. I guess we're good. Y'all say y'all can hear me. All right, but yeah, the voice probably changed because it like disconnected. Okay, so y'all said we're good. All right, we good. So I like to be able to look at everything on a 1 hour time frame, right? The 1 hour time frame is a time frame to where I get enough information off of as far as data. And then if I need to be able to look up higher time frames, I do that. But whenever I'm scrolling through pairs to see if I like anything, I'm focusing on the 1 hour. So there's going to be 4 different confirmations I like to be able to look at. That are going to be the same confirmations I utilize every time I look at a setup or a potential setup, right? It's going to be the trend, my directional bias, is there weakness in the momentum, and do we have divergence, okay? Literally those same 4 things every time I'm looking at a setup. So I think it's pretty self-explanatory. This will be a downtrend, okay? So as we can see, you know, the market, as far as like what we see on the 1 hour, we did end up breaking this previous, you know, structure low. As you see, the market created a high up here. It started dropping, gave a retracement, ended up breaking lower, okay? And technically this high has not yet been broken. So you could still perceive this as a downtrend, right? And now the market is basically trading within this structure range, okay? So from this high to this low, this is basically where you're trading from, okay? So for the most part, if you want to be able to still trade with the trend, you'd want to keep looking for selling opportunities until the market either hits your stop loss or shows you it just wants to start moving back up. So from this spectrum, I'm looking at this as a downtrend. Now, the next thing I'm going to look at is my directional bias, okay? So what I usually do is whenever, you know, I get in a little bit closer, one thing that we could initially do is we could look at the last impulsive move, okay? So from the 1 hour time frame, we can see the last impulsive move was from up here, right? Where the market ended up, you know, going lower. So if I were to take my fib from this last high to this last low, right? We can say that the market ended up giving us a retracement to the deepest level of the fib, which is going to be the 88.6, right? So not only have I identified the overall trend of the market, which is a downtrend, right? And a smaller spectrum, I've now confirmed my directional bias, which is for shorts or continual sales, right? So we got a deep enough retracement into a fib level, right? Now, the next thing I want to be able to look at is this this markup that I have is actually from, what does it say, January 20th. So this is something that, you know, a lot of people may not do on lower time frames. My bad. Can you say that again? The 4. Oh, I got you. So I'll type it in the chat. So it's trend, directional bias, directional bias, momentum, weakness, and divergence. All right, so I typed that in the chat for Michelle. What's news looking like this week? Let's go check that. Y'all know I'm a little bit different. So one thing y'all will notice, I'm gonna do it just because I'll do anything for my boy Slick. But I'm a little bit different of a trader. I've said it a couple of times. Nothing against anybody else, but I personally don't check news. I don't look at the DXY. I've explained why before, but it's kind of a habit I want to get out of, because one thing I don't want to do is I don't want to put my habits on somebody else, because checking news is a good thing. It doesn't make me any difference. So I think it is FOMC week. So we checking the news. My boy Slick. All right, so we do have a little bit of news tonight. So basically, yeah, I'm gonna start doing this. I'm gonna get out the habit of not looking at the DXY and the news, because I want to be able to. Never mind. I keep that to myself. Anyways, though. So for news tonight, we do have Euro news at about 4 a.m. This is Central Time, because I'm Central Time. So if you're Eastern, obviously you add an hour to this. So we do have, you know, 2 orange folders, which if you guys don't understand how to be able to pay attention to Forex Factory, to be real with you, you really just need to pay attention to the orange and red folders. Yellow folders, I ain't gonna say don't mean anything, but usually they really don't mean too much. So for the most part, 4 a.m., if any of you guys are trading Euro pairs or Euro crosses, make sure you look out for that. Around the New York Open, we're gonna have some high impact news for the dollar. Yeah, we got a lot. So basically around New York Open, guys, if y'all are trading any USD pairs, make sure y'all are paying attention. There will be some pretty high impact news events. Shout out to my boy Slick. There's a whole war. Yeah, you show it right. There's definitely a potential war with I ain't gonna act like I pay so much attention to the news, but I want to say Russia and Ukraine. So yeah, there definitely could be a lot of European activity going on, to say the least. Okay. All right, cool. All right, bet. So we got that out the way. So like I said, 4 a.m., pay attention to Euro pairs. New York session, pay attention to USD pairs, right? So next thing we're going to talk about is one thing on a higher time frame that I like is I keep my markups for a while. What do I mean by that? I've had this markup that we executed on AUD USD last week since January the 20th. So this candle of emphasis right here, I knew that the market would eventually return to this. Obviously, I was hoping for by time return, we got a reaction, because just because I liked it doesn't mean the market likes it. The market could have broke past it, hit my stop loss. So I just knew that I wanted to be able to see this candle get touched before I look for a continuation on that sell. I've had this markup since January 20th. It just happened last week. So that I've probably been holding it for damn near 3 weeks, right? So this is one of the beautiful things about keeping your markup on your chart, and don't erase it just because it doesn't happen right now. Okay. So whenever I initially found this candle, I'm gonna walk you guys through what I was looking for, right? So we've already broken down all that other stuff on the 1 hour. So basically this candle, okay, actually I don't need to do all that. Basically on this candle, I'm gonna show you guys entry, okay? So for me, as I said, I like using higher time frames, and most of you guys know whenever I look to enter, right, I'm pretty much looking for the biggest candle on the highest time frame, right? What I mean by that. So if we're focusing in on this area right here, right, all I'm gonna do is I'm gonna start working my way up these time frames until I find an engulfing and or institutional candle that I like, right? Different people have different candles that they like. I really like the biggest ones, like I said, on the highest time frame. So you got one right here on the 5 hour, right? I definitely feel like it could be a bigger candle. So we're gonna keep scrolling. Got the 6 hour, right? 6 hours pretty significant. And this is all I do. So like whenever I'm scrolling through these and looking for these candles, I'm gonna put a box on it. So as I go up to a different time frame, I can see, is this the biggest one? Right? So notice, right, the 6 hour box is still the biggest one as of right now. 7 hour is way smaller. 8 hour, that's not an engulfing candle. 9 hour, right? Now notice the 9 hour and the 6 hour are basically the same size. So since I'm gonna go with the highest one on the highest time frame, I'm gonna go with the 9 hour by default. So that's pretty much how I got to this one. Okay. So whenever I ended up getting to the conclusion of the 9 hour candle, within this candle, you guys, I mean, it's pretty self-explanatory for my regulars. I break down every candle the same way. I'm gonna start off with the 50% of that candle, not meaning that I'm gonna enter from it, more so I know where it is. Okay. So the 50% of that candle, right? So I'm gonna just go ahead and put a horizontal line on here just to see where it's at. All right, so 50% is pretty much right there, right? What's the next thing I'm gonna do? All right, y'all know the next thing I'm gonna do is I'm gonna take the fib from the high to the low. Okay, I'm gonna go ahead and put on the regular fib, not the 50% fib. Let me check the chat. No problem, my brother. Yeah, we'll hope not. Shout out to Russia. I don't know why I just shouted out Russia. That probably wasn't. I don't know. It's just a habit. I don't even know why I shouted out Russia. All right, cool. So the next thing I want to be able to show you guys is how do I go about entering? All right. So whenever I initially get the 50% of that candle, the next thing I want to take advantage of is the Fib retracement. So I usually tell you guys whenever I'm looking at the Fib, I want to be able to find a retracement between the opening of that institutional candle and the 50%. So the opening is going to be down here. The 50% is up here. Now, I'm going to tell you guys why I did not put my entry at the 50%. So remember what I told y'all, right? The 50% doesn't always get reached. So if I was a person that just generically put it at the 50%, guess what? I would have missed out on the entire setup. That's not what we did though, right? Because we like to be able to utilize the fib levels. So notice how this 88% fib level lines up in our entry zone, right? One more time, entry zone is between the opening of the candle and the 50%. We want to be able to utilize a fib level that falls in that entry zone. See how perfectly this market ended up reacting? You literally can't do it any better than that, ladies and gentlemen. Look at that. Look at that reaction, right? We got the first reaction and it ended up coming a little bit higher. And then we got that straight drop. Now, is this play over? No. So what I'm gonna do is I'm actually gonna give you guys the ability to take advantage of a re-entry. All right. I'm gonna give you guys to take advantage of a re-entry. Cool. Move these over a little bit. All right. Cool. Save that. Let me check the DeLorean, see if they called out anything worthwhile. And as y'all know, immediately following this call, I do always promote, you know, John Dollery and Rock Kumar are going to be coming on. Oh, shit. Hold on. Yo. What is this, Euro Chef? I ain't gonna lie, I kind of like that. Let's go look at Euro Chef 15 minutes. I ain't taking a DeLorean in a minute. And it is in an imbalance. Nah, I'm gonna have to pass. All right. This is a good looking DeLorean, to be honest. But I'm gonna tell y'all why. We not gonna take it. I ain't gonna go too deep into this. I'm gonna just mark it up, see what it look like. This is a good DeLorean, but I'm gonna tell y'all why I'm gonna pass it. And the reason why I don't necessarily call out DeLoreans in the chat is just because I've gotten, to be real, I'm gonna be honest, I don't necessarily look for these as much anymore since you know, you have to be more proactive, and the way that I trade, I'd rather just set a pending and stop looking at the chart. Give me 1 second. Well, I know this will be a pretty good risk to reward. I have my reasons. Yeah, that would be pretty nice. I'm gonna tell y'all why I'm not gonna take it. This is probably gonna go up. I'm gonna save this markup and then we can look at this tomorrow. I usually do purple. Let me tell y'all why, okay? So this is another learning lesson for anybody that trades a DeLorean strategy. Like I said, I'm extremely picky, but I've also back tested a lot. Keep in mind, even though I'm about to pass this up, I do feel like this is still gonna go, but I don't like to ignore rules that I've already implemented, because if I lose, I'm gonna just be like, I know I shouldn't have did that. So the TDI is gonna be the secret to trading a DeLorean strategy, okay? One thing that I've learned is if you are not utilizing the TDI with this strategy, your success is going to vary. Okay. If you're just looking at straight chart, you might not have the same success. So if we go through the 4 steps, is the green candle bigger than the red? Yes. Is there a red line cut in between both candle bodies? Yes. Is there a gray, aqua, or blue line closely below? No, but it's cutting through, so that counts. Do you have enough space to trade to the next EMA? Yes. Okay. But one thing that I've noticed is if you look at the TDI, this right here can be tricky. So whenever you have this green line that imitates the RSI, whenever it comes outside the bands and comes back in the opposite direction that you're looking to trade, one of 2 things can happen. This can either just be a strong pullback for the continuation, or this could be showing that the market is going to keep dropping. So I usually stay away from all DeLoreans to where this is going against the opposite direction of the potential setup. So since this is coming back in like it wants to sell, I don't want to take this buy. If it were doing something like this, like if it threw like a W, came outside the bands and then came back in, that's different. But because it's doing an M and I'm looking for a buy, that's why I'm going to pass it up. All right. Maybe somebody will be able to take something from that, maybe not. But yeah, like I said, we'll look at this tomorrow and ultimately see what it ended up doing. I feel like it is going to still, you know what I'm saying, go up, but I'd rather not take the chance. It is only a 7 pip stop loss. So it will be a 4-1 and so on and so forth. But yeah, I just rather pass it up. So that'll just be something that we look at for like shits and giggles tomorrow. That's one thing I am not really tripping on anymore is I don't really have FOMO like that, so I can pass up setups because I get so many setups every week. Anyway, so let's go back to what we were talking about before I get thrown off. Because look, this is one thing that helps me not get FOMO. Y'all see how many different setups I got? Look, 1, 2, 3, 4, 5, 6, 7. You feel me? So that's one thing y'all got to be aware of. Do not have FOMO. And keep in mind, one thing I want y'all to learn from what I just did that a lot of people aren't comfortable with doing, be comfortable marking something up even if you don't take it, right? I'm not finna take this, but I'm gonna keep it marked up because guess what? If I come back and it did what I'm saying it's gonna do, that's just gonna build more confidence for me in the future. But I'm not attached to it emotionally because I'm not actually in the setup. So as y'all see, it is, you know, reacting and stuff like that, but we just go let it rock out. So let me go back to AUD USD and show y'all that re-entry. All right, so let's look at the re-entry opportunity on AUD USD. All right. Let's see. All right, bet. So look, so if we go back to where the market ended up reacting, what I want y'all to focus on is this area right here, okay? So not only did we get that sniper entry, who there over there? That's my boy Hector. Look at my boy Hector over there up to no good. I already know it. I can see mischief. I can hear the mischief even though y'all on mute. I already know something. Not what's the word? Something unholy is going on over there. I can sense it. But yeah, so look, if y'all focus on this area right here, what you over there eating? So you got the munchies, brother. What's that? That man got animal crackers, boy. You done took me all the way back. I ain't had an animal cracker and god damn. That is hilarious, bro. Oh shit. That's funny as hell. So look, if y'all focus on where I actually got my entry, right? Notice how the market instantly reacted. Okay, the market instantly reacted and trended lower. But y'all want to know what's so dope? The market is giving me a re-entry off the same time frame as the entry that I took. So I don't take re-entries often. Okay, I need like a picture perfect looking opportunity. So the only time I take a re-entry is if the market throws me another candle off of my original entry. So look at this, right? This is textbook. One candle, the market threw me an entry off of that entry, and now it's giving me another entry in this one. So in this big ass 9-hour candle, what I would like to see is, right, some sort of retracement. We do have imbalance up here, some sort of retracement for a continuation lower. So one of 2 things, right? If the market breaks this low, it's just going to keep dropping. That's what I feel. I feel like if the market breaks this low, it's just going to keep dropping, which I'm not mad at because I'm still in a position. So I'm not really tripping. But obviously, what could happen that can help us make more money is if the market comes back, reacts, and then gives us our sell-off. Okay. That's an opportunity that could happen. Now, let me show you guys how I found the entry on the re-entry, and then I'll drop that in the chat for y'all. So same concept, right? This is going to be the exact same way. So I'm going to do the re-entry the same way, right? I'm going to take the 50% of that candle, okay? 50% of that candle, like so, right? Then I'm going to take the fib from the high to the low, all right? From the high to the low, it's not perfect, but it's not that big of a deal. Y'all get the gist of it. Fib from the high to the low. Shit. Damn it. Fib from the high to the low. All right, but so take the fib from the high to the low. Try to line that up. All right, cool. Okay, now you might be asking yourself, you're like, well, wait a minute, Tyree, don't you usually do this right here, right? Wouldn't you normally be looking for an entry right here? Right? You usually said from the opening to the 50%, you want to be able to take one of the fib levels in the entry zone. But it looks like your entry is above the entry zone. Well, let me tell you why. So y'all know, I always tell y'all, you got to define what your max stop loss is, right? My max stop loss on Forex pairs is 40 pips. So if I have a 40 pip stop loss all the way up here, that obviously means if I would have put it lower, it would have been too big for me to take the setup. So I'll finesse my entry so that it still fits within my stop loss range, right? So if I started from down here, that's too big, then I'm gonna move it to the next fib level. If that's too big, then I'm gonna move it to the next fib level. But let me show y'all something else, right? One thing I learned as well too is notice how the market technically already reacted off of this candle, okay? The market already gave us a reaction off of this candle right here, okay? Within this range right here, the market already gave us a reaction. So whenever the market gives you a reaction off of that candle, it doesn't actually have to come back. But what if I were to tell you on a lower time frame, this candle's not been touched yet, right? This candle's not been tested yet. So this is still within the same formation, but this is on a lower time frame. So this is also why I'm looking for a deeper pullback on top of, you know, still making sure that my stop loss is not bigger than 40 pips. So if I were to take the 50% of this, all right, let's see what this will be. So notice how this lines up almost perfectly with the 50%, okay? And that's, I mean, I could really just go ahead and move it there, to be honest. Bomb on it. Let's just go ahead and do it. Save us a couple pips. I like making sure my stuff is perfect. Let's see. There we go. All right. How many pips do we save with this? So y'all know, like round them. I think I saved like 1 pip. Yeah, definitely. It's not that big of a deal, but that's cool. So we'll just move that up, that extra pip. Try to make it as cute as possible. Now we got 39. All right, cool. So that's kind of like the example of like what I'm referencing. So now we have another candle within that 9-hour candle that we can really be looking to see that pullback. We're looking at the 50%. Why? Because the 71% within this entry zone would be too big. We already determined that. So by default, I will move it up to the next level. I like to keep it within the entry and the 50% if possible. I don't like going past the 50% because it's less likely the market is going to give me that deep of a retracement, okay? So that's why I want to be able to keep it within the 50% to the opening if possible. So I'm gonna go ahead and give y'all that. I'll just keep it on that time frame. What's that? So this is the 6 hour. And I'm not going to officially call this out because we're still technically in the original position. So this would just be something I have to take upon yourself. That's a great question, actually. Correct. So yeah, it got mitigated on the 9 hour, but it did not get mitigated on the 6 hour. So that's why I'm still looking for this potential pullback. That's a really good question. Correct. So we're still looking for it to mitigate the 6 hour. We got the 9 hour, but it hasn't mitigated the 6 hour. That's why it does make sense for it to possibly come back to not keep going up, or to just come back to keep dropping. Okay. One other thing, I'm gonna show y'all one last thing as well too. I learned this from Starboy. So the market does something, it's called moving in measured moves. Okay. So basically what measured moves means is whenever the market gives you one impulsive move, a lot of times it's going to give you another impulsive move of similar or greater distance, right? Meaning, let me put this on the bottom. All right. Basically meaning, let me put this on the top. Avoid confusion. All right. Basically what it means is, notice how this market had an impulsive move of about 309 pips, right? This move should relatively be the same that this move is going to give me, which should be for another 309 pips, which, as you see, takes us past our final target that you see down here. Okay. So that's just something I wanted to throw in there. We got about 15 minutes left, so I'm going to go ahead and see what else we could talk about. I was really kind of stretching this one because, like I said, we really don't have, we have setups, but whether or not they'll happen tonight or I'm not sure. Definitely should happen this week. Let's see. So these were setups that I sent. It's crazy. So both of these setups ended up basically pulling back to the entry, and now they're reacting again. But I'm out of these, and I don't plan on recalling these out. I don't trade like that. Like once I've hit take profit and it hits my break even, I'm out. But this one, I ain't gonna lie, this one actually reacted really nicely. So this one ended up, I was looking at it, but I was like, nah, I'm not, I'd just rather move on to a fresh setup. So this one, as you guys can see, you know, how far of a distance it went from this initial entry right here. This is last week's setup, right? I can see how far this went. This is a great trade from last week. But notice how it literally came back, sniped the entry again through a 1 hour candle, and then came back, reacted off it. And now it is moving. And like I said, I was honestly looking at this and debating it, but I was like, nah. I mean, from looking at on lower time frames, did actually look pretty good. But I don't trade like that. Like that would be something I have to back test. Like one thing I don't do is I don't trade something if I don't feel, if I'm not confident. Every setup y'all see me call out, I know that that bitch is finna go, right? I don't know that this is finna go because every time the market comes back to a previous area, it can get weaker. Now it looks like it's probably reacting off of this little wick over here, I'm assuming. But like I said, like once I get the initial entry, if it comes back, I don't like taking it again. So I'm cool on that. I just rather take a fresh setup. But it's cool to be able to see this play out because, like I said, this was something I was actually looking at. I just know I wasn't finna hop in. Let me see what this would have even looked like if I would have taken it. So let me take the fib from the low to the high. Let's see. I wouldn't have even gotten an entry anyway. So that makes me feel better. Because I would have looked to enter off of this 78. Because the same thing applies. So if I tell y'all I want to be able to get my entry zone between the opening and the 50%, even without pulling out the 50% fib, I know somewhere in this area would be about the 50%. So I know by default, I would have entered at the 78.6, not the 71%, because this is not technically touching the body of the candle. So technically, even if I would have looked to get in this setup, I would have missed it altogether. So that makes me feel better. I always feel better whenever a setup that I possibly wanted to take wouldn't have even given me an entry in the first place. So no regrets at all. Wouldn't have even activated for me. All right, that makes me feel better. All right, so we are done with the AUD USD. Let me go ahead and give y'all this markup off the 6 hour. So just remember, even without me giving y'all the information, let me make these different colors. I'll make this a different color so it don't confuse y'all. I'll make this like blue. And then I'll put re-entry so y'all can see it. All right, but so just make sure, especially for anybody that's new, right? I'm gonna break this down for y'all. When I drop this in the chat, the blue number is your entry, right? The lower red number, 72510, that's gonna be this stop loss right here. 72510, not 72790. That's for the original position. It'll be 72510. So your entry is in blue. Your stop loss is the lower red number. And then these will be your take profits, right? Oh, this actually, nah, this will be it. Nah, this will not be a take profit. Y'all can really just use these two take profits. So y'all can use 70510 and y'all can use 69670. If y'all want to, y'all can figure out whatever number goes right here. This can be like your TP1. This could be TP2. This can be TP3. Okay. So y'all go figure that out. It will be a 39 pip stop, even though obviously y'all can figure that out by putting the parameters on your chart. So I just put right here, this can be like a TP1 at that low. But kind of like I said, if it breaks below this low, the market's probably just going to keep dropping. So obviously we'll check back up on that tomorrow. So let me drop this in the chat for y'all. And then we'll move on with the last like 10 minutes or so. Let's see. Let's check up on Euro Chef to see what that did. Still kind of doing whatever. All right. Let me see. I'm debating on what I want to talk about because y'all know I don't like talking about stuff if I don't feel like it's gonna activate. Because it kind of takes away from shit I could talk about like on the previous day. I'll go ahead and talk about Cad Jpy. Just because it looks hopefully both of these activate tonight. I'll just talk about one of these because I ain't gonna have enough time to talk about everything. I don't even know what's gonna activate. I guess I'll just talk about Cad. I'll talk about Cad Jpy just because Starboy was also looking at Cad Jpy on his session today. So we'll talk about that. So on Cad Jpy, right? I'm gonna tell y'all why I was looking for Cad Jpy. So once again, if we are looking for the overall trend of the market, this is obviously a downtrend. Okay. So one thing I can actually notice is if I were to take my fib from this high to this low, right, you can see that this right here is actually a correction or retracement within the overall downward momentum. So obviously the market was pushing very aggressively to the downside. This is a retracement, right? We got the retracement to as deep as the 78.6. And then the market obviously, you know, broke additional structure levels here. Okay. So we had that break of structure here. And then once again, if you notice, you can really take the fib and do the same thing again over here. Take the fib from the high to the low, right? The market ended up retracing to the 78.6 literally again. And then once again, we technically did break additional structure. Okay. So all of this is showing us that we are in a continued momentum to the downside. So as you guys see, the overall trend is bearish. My directional bias is also going to still be bearish. So notice, and if you guys don't remember, we actually took advantage of some shorts somewhere up in here. I'm not going to go too deep into that because it don't really matter anymore. But a couple weeks ago, we definitely took advantage of some shorts up in there. Now, I think this is pretty self-explanatory, just because if any of you guys understand, you know, how imbalances or inefficiencies work in a market, these are going to be where you want to be able to see the market return to. Okay. Notice how I have an alert right here so that I know whenever the market is approaching my sell limit. So I'm not going to call this back out until the market gets above this area, because I called it out yesterday, then I had to delete it. So I don't want to keep calling it out to delete it. And y'all know me, like I said, I don't like holding stuff past the session. So if it doesn't activate within the session, I'm gonna delete it. And if it still looks good when the session starts again, I'll just put it back in. So this right now, for the most part, how I'm looking at it is this high did not get violated. And we already confirmed that this initial high is why we got this retracement. So this is now the new relative high. This did not get broken, right? The market on top of that, if you look to the left, let's see where the market reacted, because you always want to be able to see the market react at a place that makes sense. So the market also reacted in another imbalance, okay? So we have another imbalance over here to the left that you can see the market clearly reacted off of, which makes sense as to why we got this formation to drop so aggressively. Now, all we're looking at is some sort of retracement, right, back into this imbalance to be able to see the market possibly drop lower. So once again, how did I find my entry? Right, let's go over that real quick. And keep in mind, I'm not going to go over it right now, but GBP JPY is basically the same setup. If y'all look at it, look at how this kind of throws like an ugly M. And so does Cad Jpy. It's kind of like an ugly sideways M with this big ass imbalance. Same thing for GBP JPY, ugly M, big ass imbalance, okay? Same thing, I'm waiting for it to break above this high, which I got that alert before I send back out that sell limit. So Cad Jpy, if we start flipping through the time frames, remember, I want to be able to find the biggest engulfing candle on the highest time frame. So on a 2 hour, we got this. It's obviously not that big. 3 hour. That's the other thing too. I like getting the highest one. So I would not move this box lower. I would just keep it up here because it's a higher one, right? This one's higher up on the okay. All right, yeah, that one was higher up. 3 hour, 2 hour, 3 hour, 4 hour, 4 hours big. So I'll make the box bigger. And like I said, the whole goal is I just want to find the biggest one on the highest time frame. So notice, right? Notice how this yellow box has space. That means that the 4 hour candle is bigger than the 5 hour candle because the 5 hour candle has space in it. So I'm gonna keep going. 6, 7, 8, 9, and 10. All right, so the 10 hour candle by far is the biggest candle. So that's the candle I'm gonna work with. All right. So off of that 10 hour candle, I'm gonna do the same shit. I'm gonna take the 50% of that candle, right? Like so. I'm going to use my Fibonacci from this high to this low. And I'm gonna see if it fits within my entry zone. Bam, bam. Okay, so my entry zone would be where? From the opening. Okay, from the opening to the 50%. And if y'all Actually, can I move this up? Let's see. Oh yeah, it did actually drop lower. Okay, so I haven't even remarked this up. I didn't realize that. Because whenever I sent this out yesterday, this was the low. So you actually need to redo this entry. I actually probably need to do it on GBP JPY as well. Yeah, so what ended up happening, the reason why I deleted this is because it kept dropping. So this was the low yesterday and then it dropped lower. So actually, y'all are gonna see in real time me adjust this. And it's not like a big adjustment, but you know, every pip makes a difference. So this is now where I would be putting my entry. I'm gonna round it off because I know I like even numbers. And I mean, that's 3 pips. Shit, I'll take it. So move that. This thing be tripping when you try to modify. It's probably gonna make me put in a whole new one. Come on, bro. Let's try one more time. Yeah, it's like it don't like you modifying. Hold on. Y'all bogus. Hold on, y'all. They gotta get my alerts in. You feel me? 91, 170. So active. All right, cool. Let me get rid of this one. All right, cool. So now it's a 37. No. So this needs to go up. Now it'll be 34 pips. I'll take it. And that's basically like what I mean. So I just want to be able to take advantage of the fib level that lines up in my entry zone. That's going to be the 50% to the opening of that candle. So that's pretty much what I'm looking for on Cad Jpy. So if you guys see, once again, we really just want to be able to get this market to move back up, hit our entry, and then, you know, give us that beautiful downward momentum. Let me do the same thing for GBP JPY. I need to readjust this too. So oh yeah, this gonna be a nice adjustment. I like that. I already like what I see. You feel me? Because trust me, if I don't have to use a big stop loss, I don't need to. But I just know 40 pips that's my max. I'm cool with 40 pips. All right, so let's see. So same thing. So if I'm on a 9-hour without actually going into breaking this whole setup down, we just go readjust the entry. 9-hour. So if I'm looking at my entry zone, where's the 50%? 50% is gonna be here. I have to keep it here anyway, because it's a 40 pip stop loss anyway. Yeah, so I can't really move anywhere. All right, yeah, because this is already maxed out and I'm already above the 50%, which like I said, I'd rather be within this zone. So anything past the 50%, it's already a chance that the market might not give me that retracement. So we'll just leave it as is at that 40 pip. The other one was less than 40 pips, so we had some wiggle room. But when it's already maxed out, I really don't want to move it deeper because that's less likely of a chance for it to activate. So we'll leave that as is. So yeah. So I mean, as of tonight, what y'all can look out for is y'all might possibly get, you know, CAD JPY and GBP JPY. GBP Chef is also similar. If I pull up that 9-hour, GBP Chef is another opportunity as well, whether or not that happens tonight. This one is pretty clean as far as if you guys look to the left, right? Look at how it reacted beautifully off of that previous institutional candle. All right. And I'm just looking for a continuation to be able to take it lower. So it reacted, did not break this previous high. So we want to be able to see it go lower. So USD Chef as well too. So like how y'all see, I mean, we got Got a lot of setups for the week. We just got to wait for them to, you know, be able to kind of go in our favor. So let me look at the chat real quick, but we're pretty much done. I personally don't trade US 30 for the person who asked, so unfortunately I will not be able to look at that. I don't trade gold anymore, Fisher. Gold is like my arch nemesis. I just had to let it go. That's one thing I learned a long time ago. I'm a Forex guy. I'm not that good at commodities, indices, cryptos. I'm just really good at trading Forex. Took me a while to be able to just be disciplined to only trade Forex, but yeah, so that is why y'all only see me look at Forex pairs. That's all I literally trade. All right, bet. So like I said, look, this is what I'm finna do before y'all hop off, right? I'm a student. I'm about to show y'all what I'm finna do. All right. Yeah, these definitely look like these go activate tonight. So y'all definitely be looking out for those. I'm about to go hop on this John Dollery, Rock Kumar. You feel me? Tuesday, Wednesday, Thursday. This is what I do as soon as I get off this call. I go hop on the goats, see what they talking about, and you know, see to be able to continue furthering my information. Let's see if they're actually talking before I get ready to hop on. But as usual, I appreciate everybody for being on the call. You know, y'all keep your boy going. And the year just started, so I'm looking to be able to finish off the year pretty strong. So I appreciate everybody. Shout out to my boy Fisher. Appreciate you for hopping on, my brother. Already, if y'all don't know, that boy Fisher be making a bag and a half, right? That boy Fisher be making some bread. So I appreciate, you know, everybody for being able to take out y'all's time to hop on my call. Definitely does not go unnoticed. I appreciate all my regulars, Christian, $1 trillion value, Gabby. Shout out to my boy Penitentiary Trader. If y'all do not know, we do have an individual on the call that is serving time in the penitentiary. So anytime y'all get on the call and y'all see Penitentiary Trader, just know that man really in the pen. You feel me? So if we got a brother in prison that can get on his cell phone and mark up a chart and get on these calls and all the other stuff, ain't no reason for y'all to be making no excuses out here in the free world, okay? So shout out to my boy Jermaine, aka the Penitentiary Trader. I'll definitely be looking out for my boy in the future. Y'all will be seeing big things coming from him. And with that being said, I appreciate everybody for being on the call. Appreciate all my regulars. And I'm about to hop on this call. Maybe I'll see y'all on there. Maybe I won't. But one thing I will definitely do is see y'all tomorrow at the same time, 1 a.m. Central, 2 a.m. Eastern. And expect for this recorded call to be uploaded on my YouTube channel later on, either today or tomorrow. So with that being said, peace out. Don't do anything in the market I wouldn't do. And I'll see y'all tomorrow. Deuces.